Good afternoon. I'm Maha Al-Ghunaim, and on behalf of the board of the Arab Bankers Association of North America, I just wanted to thank you and welcome you all to our lunch today. It promises to be a very exciting one with our guest of honor, Mrs. Maha Al-Ghunaim. We're very excited to have a discussion about her entrepreneurial experiences and successes with Global Investment House and the broader Middle Eastern economic situation. Welcome again to our guest of honor, Maha Al-Ghunaim. Thank you so much for joining us.
Thank you.
It has taken us quite a while. We have wanted Maha to join us for many years now at ABANA, and it took her daughter graduating from Columbia last week to finally to have the right opportunity. So first of all, congratulations to you both. Wonderful to have you both here. All of you, I think, have a package in front of you which features Maha's amazing biography and achievements and acknowledgments throughout her exciting career in finance. And so I think we'll just get into the heart of it. So Maha, after starting your career in finance in 1998, you started Global. And I don't want to admit it, but I do actually remember what was happening in 1998. And it was a pretty exciting time in global finance. So one would assume you must have been pretty confident about the opportunities in the Middle East, in Kuwait, and beyond. So tell us a little bit about that. What made you start the company, why you started the company, and the challenges of doing it?
Thank you. And thank you, Mona, for the nice introduction. And thanks to everyone who is joining us today and taking time from your busy schedule to meet with me. Obviously, although people think 1998 was an exciting global environment, but oil prices at the time were around $8. So it's easy now when people look at your success and think that you just happened to be in the right place and you were lucky. But everybody thought at the time when we created Global that it was insane. And why the hell would you do an investment company with oil prices around $8 to $10? And everybody was very nervous about the economic situation in the region and all the challenges comes with it. But first of all, let me take a step back and tell everyone, first of all, I'm a mathematics major. So I didn't have any knowledge about business. Never taken an accounting class, never taken a finance class, never did any of that. But I had a very strong mathematical background, which I think was a very good platform to learn business and move from it. And started my career in an investment company which was owned by the government of Kuwait, called KFTCIC. It was one of the investment arms of Kuwait Investment Authority, which was a fantastic platform to learn and to do a lot of work. And funny enough, by the time I was 28 years, I was managing the portfolio of KIA for almost $1 billion. You can imagine the mistakes I've made as 28 years managing the money of KIA, but it went unnoticed because it was such a huge portfolio, but it was a fantastic experience. And it was a fantastic platform for me to learn, and there was a lot of training and attention to national employees within these kind of companies. And then the war happened and the invasion happened, and the government has decided after the liberation of Kuwait to merge all those investment arms that they were referred to as the Ks, triple Ks, KIC, KFTCIC, and KIIC. And we got merged, and that was one of the biggest challenges to see where will I be positioned on the career ladder. But luckily, I was appreciated by my bosses at the time and became the assistant general manager for asset management across international and the regional asset management platform. It took me about a year or less than 2 years to realize that it was time now to launch my own thing. I felt very frustrated and hand-tied within a government investment company. Fantastic platform. That? Yeah, I mean, in terms of the reward system, it's very limiting. They promise you something and they never give you what they think, oh my God, now, although you made millions of, but we can't pay you that kind of money, you know? And you want to create new products, new ideas. They were always limited and very worried about taking risks, investing prop investments, a lot of things. So, and I wanted to make my own money. I wanted to create my own wealth. So creating Global Investment House through me and a couple of founding members who we grew up together in terms of the business world and decided to do the company. The prospectus was printed out of my PC and it was oversubscribed 10 times in 2 weeks because we understood the client trusted us, they wanted to move their money with us. And we did Global and we wanted to make a difference. And I remember visiting the governor of the central bank at the time, Sheikh Salim al-Sabah in Kuwait, and he is a very good mentor of mine. And I sat with him and I told him, Your Excellency, I want to do an investment company. What do you recommend? What do you see? He says, well, I'm tired of the commercial banks. I've been asking them over and over to develop research. We don't have any data about the market. I said, fine, research. And I'm also tired of this capital market. There's nothing in this market except two asset classes. Either you do real estate or you gamble in the equity markets, public domain. There's just nothing. What kind of a capital market is this? Okay, point taken. So we invested immediately in research. And I think although it was costly and didn't generate any revenue, it built the brand to a level that became like a think tank, and everybody respected the company because of the research and the data. And I always knew that if you want to attract institutional and international investors into the region, the first thing they look for is data. International investors always wanted data, and it was not available. So we created a very important research, started with buy and sell recommendations on equity markets, then went into asset classes, and then went into sector analysis, oil and gas, insurance, and so on, and became a very strong platform and very well recognized in the region. And we decided to do different kind of products. They seem so simple for especially people who operate here out of New York, but we were one of the pioneers in creating money market fund, bond funds, private equity funds, direct investment, changed the laws, created two kinds of shares, a lot of things that did not exist. So it was a fantastic platform to do a lot of simple, basic products that did not exist. Commercial banks were too busy.
And did you establish them with your own proprietary management, or did you partner with
No,
others?
it
How did
was,
you find the
we
best way
would
to go?
invest a little bit of our money into these products, but also we had very good support from the client base and the sovereign wealth, which is very important. I think the sovereign wealth in the region, especially an institution like KIA or Public Institute or Kuwait Fund or Arab Fund, who are all based in Kuwait, very flooded with liquidity, are constantly looking for those kind of products. KIA in particular, Kuwait Investment Authority, felt the responsibility of developing the market. At that time, we had a managing director who was pioneer, had vision, wanted to do things differently, wanted to introduce funds. So KIA would support these kind of products, which was a fantastic platform and great support to have all these products pop up with the support of KIA. So when we did the bond fund, they seeded it. When we did direct investment, they seeded it. When we did real estate, they seeded it. They were excited about seeing those kind of products come to the region.
But you also brought in retail investors into your funds, and which I'm sure must have required a lot of education also in terms of the local
Yes, but
market.
I think until today, I don't find the retail investor very much interested in the mutual fund industry. They still prefer to do their things their way. I think there is something about taking control of their fortune. They just like to go to the market and trade. And even if they lose, they feel it is that empowerment, and I can make my own decisions. And that comes also partly because of lack of information, knowledge, trust. The financial crisis didn't help because a lot of people lost a lot of money, and investment companies were really black labeled after what has happened. So it even made them shy away from investing through. So it's basically the institutions.
Right. So even though it feels like it was yesterday, it was actually quite a number of years ago, the financial crisis. Let's talk a little bit about that, because obviously Global had a very public experience in terms of the aftermath of the financial crisis, as did most investment companies. If you could talk a little bit about that, and I've often heard people in the region talking about Global as the one and only successful turnaround that has come out of the crisis, which is a great compliment to you and to the company. So if you would, just talk a little bit about the crisis, how it unfolded for you, and obviously a very interesting case study in terms of your creditors and the restructuring.
Yeah, well, that was a very fantastic experience. I have to start by saying I have no remorse. I think what doesn't break you make you stronger. I think we've all learned huge lessons from what we witnessed through the financial crisis. People think it's more than actually 5 years, 7 years. And when we're still feeling the wind effect of that, the aftermath, it's not over. And we're still feeling that bittersweet taste in our mouth when we swallow. It's been very hard. But maybe also I should give where we were before just before the financial crisis. We, as Global, obviously, with a strong platform, a strong management team, very creative products, very strong platform, and went regional. So we were there and everywhere, and we focused on the region and became one of the most influential investment companies on the region map. We also changed a little bit our business model. There was a boom between 2002 until 2007, which was huge, and we've all felt it. Liquidity, infrastructure investments, just a lot of rallies in all across the markets, and there was a lot of liquidity. So we diverted from our original plan, started to do some principal investments. And we went into, and there were huge mega real estate projects happening in the region. There was the Dubai mega real estate, there was Qatar, there was Abu Dhabi, and everybody was just creating these cities and suburbs and huge ideas, you know. So maybe we got carried away, we got greedy, I don't know what it is, we wanted to be opportunistic. And so we started to go into these kind of investments, which I don't think were our core value. At the same time, they were very opportunistic. However, we also ended up borrowing short-term versus long-term assets. Typical mistake, but at that time, short-term borrowing was not considered short-term borrowing because they were rolled over regularly and constantly. They were just taken for a fact that they will always be rolled over. And in 2008, we had just finished our GDR and raised $1 billion out of the London market for almost above 1 KD, which was very important, was huge. The money just went into these crazy investments. And by September 2008, I've realized the situation is becoming really dire. And banks started to shut down the lines. And I didn't expect that severe reaction from GCC banks. I thought we would be somewhat more immune from what's happening internationally. What is it to us? What's happening in New York? And why was this tidal wave affecting us so severely? But it did, and everybody panicked. And suddenly we became like a beautiful Ferrari without gas. You can't drive it, you can't do anything with it. In September 2008, our leverage ratio was 1-to-1. By December, it was 5-to-1. By next year, it became 20-to-1. And suddenly there was just no way we're going to repay that kind of a debt. $1.7 billion it was. Markets was very illiquid. You couldn't get rid of the assets. There was no volume, no turnover, nothing. Market just completely died. So we took a conscious decision to be public about it and not to try to conceal it. And I think that gave us a lot of heat. But it's just the way we are. I felt this is a fiduciary responsibility, and this kind of information should not be concealed. So we went public with our default and made it very, we were listed in Kuwait, London, Dubai, Bahrain, with some legal responsibilities over there too. And we restructured by the end of 2009, 53 banks, almost 40 bondholders, for a debt of $1.7 billion. You can imagine the nightmare negotiating with one bank. He had 53 banks all across from the US to Hong Kong. And it wasn't a good restructuring. And I don't think it wasn't. It was more of pretend and extend. It was nothing. It just extended it for 3 years, tried to buy time. By 2011, everything will be fine and we will all be out of this. So 2010, I paid what was expected from us to pay, and it looked like we were on plan. 2011, New Year, watching the TV, Alexandria Church bombed, Arab Spring erupted. I looked around and I said, hell, this plan is not happening. No way. Things have fundamentally changed here. And so I called the banks in April, and I told them, if you really want to get your money back, you need to have a permanent fundamental solution to this debt issue. I can't attract any new AUM with that kind of a debt on the company. You are asking me to fire sell the assets to pay you and book losses. I'm just killing the company in the current situation. Things are not looking any better. It's out of my control. So why don't you come to the table and talk? And I've decided to hire a different kind of an advisor. I've actually chosen a boutique firm out of New York, of Wall Street, who I felt will give more of a specialized advice on this problem, and they did. And then we, in 2013, signed a permanent restructuring agreement, again with the same kind of group, but this time left the company zero debt. So we're now today debt-free totally. And the restructuring was one of a kind, and it's, first of all the debt is in dollar, which makes it very attractive for secondary traders. And number two, it is very transparent. They've created 2 trust companies out of Bahrain. Bahrain was the only platform where we can establish trust company. One of which they called NAC, and within it we moved together all the on-balance sheet assets against a debt of 1.3. And we went through a beauty contest, and we end up managing these assets. So they became AUM. And the other part of the debt, they converted it into debt to equity. And today, that firm, NCH, owns around 70% of the company. But the position of the company today is that it is debt-free. 40% of our balance sheet is in cash. We've turned to strong profitability. We have actually outperformed all our competition in the year, at least public competition, that we have their numbers in the year 2015 with almost $50 million in revenue. We're going back to listing. We're distributing 5% cash dividends. So AUM is on the rise. We're back on track.
So talk a little bit more about the AUM, how that's changed through this period, through the restructurings until now, obviously growing happily now, but how the composition of your investors has changed, institutional versus retail, et cetera, and the product mix.
So in terms of the asset management business, the business model of Global is based on 3 pillars: asset management, investment banking, and brokerage. I'll start with simple. In terms of brokerage, we have our offices all across the region. So there's in Egypt, Tunis, Kuwait, Bahrain, Oman, Saudi Arabia. So that platform helps us to attract money from those different countries in different products. Asset management constitutes more than 70% of our revenue and more than 80% of our fee business. So it is the most important pillar, and most of the focus is. We do all kind of asset management classes. We do public equities, and that could be conventional or Islamic. It could be country-focused like Saudi Arabia or GCC, our flagship. Our GCC flagship fund is the largest in the region. It's more than $150 million as for in a fund. And our Saudi public equity fund is the largest in Saudi Arabia outside from funds managed by commercial banks in Saudi Arabia. So we're very strong when it comes to public asset management, public equities.
And do you attribute that to strength in research and investment acumen,
Yes.
or strength in marketing and distribution?
No. I think it's the track record. I think we were, it's our core. It's what we understand. I come from an asset management background. So it's really what we understand, and we created a very, very, very strong team. Just yesterday, they sent me an email that we won again Reuter for best fund in Kuwait. So we're excited. They've always constantly beaten their competition and the index. So it's a very strong team. So that's on the public equity domain. And then we have the private equity, which is the second largest asset class we manage. So we went into private equity extremely early. However, the challenge we've had that many of the funds that we launched in private equity had the wrong vintage year, 06, 07, and obviously it was impossible to create value in these companies when you have bought them at multiples that don't exist anymore. But we're glad that the new team and the team that is managing the private equity have been very successful in turning things around. And now we are in the progress of establishing a secondary fund that invests in the region, a healthcare platform that invests in the region, and an educational platform that invests in the region. So in the private equity, we focus on transactions within the region. And it's exciting because we were successful in penetrating the family business in Saudi Arabia.
Right.
So almost 33% of the private equity transactions we have done are actually with family businesses in the kingdom, which is very important. And that's where the real value is. And it's hard to convince them to sell a stake.
Of course. But how do you see yourself competing with some of the other larger private equity players of the region that are investing in the region? Because oftentimes global investors think that there's a lot, whether correctly or not, that there's quite a bit of capital chasing the best of deals. And so that the valuations are not really as compelling as you might find in some other markets, particularly in the more emerging parts of the Middle East. So how are you competing?
That's true.
And who is your greatest competition?
Yes. I mean, in terms of the private equity, the other firm that stands out is probably Abraj. But Abraj is doing something completely different than what we do right now. They're looking for larger tickets. They're going into different markets. They're now considering themselves more of emerging market fund managers. So they've gone completely different than what we do. We still focus on the same things. We look at transactions between $50 to $150 million. We never won a transaction through auction. because they are always extremely expensive. And it's very much about personal relationships, visiting these families and getting to know them and convincing them of what added value you're going to do to them when you come on board with them. And some of the family businesses have gone into so many spin-offs that sometimes, especially after the main sponsor passes away, the heirs start to find themselves not focused. And that's when you get an opportunity to penetrate. And for example, somebody went into technology. One of the sons decided to do technology, and now the heirs believe this is no longer valid. But there is something there to do, or a school, or education. So that's how we get our angle to penetrate.
What do you think are the most interesting sectors? And I know by country it differs greatly, but in general, what do you...
Definitely. Considering the demographies within the GCC region, you're talking about more than 50% is below the age of 30. Actually more than even 60% below the age of 30. Healthcare, education.
Right.
And that's all we're focusing on right now.
Right. And from a private equity perspective, is your focus also on established businesses and providing them growth capital? Or are you also working with strategics outside of the region to develop businesses and grow platforms?
It's most of the time so far growth capital. And it's very interesting considering our regional footprint. Many of them, for example, there is a Saudi company we've invested in that produces الشتاشة, the normal traditional wear of men in the GCC. And all of them wear the same one, but their market is only in Saudi Arabia. Right. So that when they see us and they see our footprint, they're very excited about doing that. We have a very active office in Turkey. So recently we bought a very important company in sports retail who believe that we can open doors for them in Dubai, in Abu Dhabi, and in other parts of the GCC where they want to expand. So that regional footprint gives us a lot of advantage, helping to, those companies grow across region,
right,
across countries.
So you talked about the public market funds, the private equity. When is there going to be enough of an infrastructure region-wide to talk about hedge funds or an interest in locally managed and investing hedge funds?
I think this is a real challenge considering the rules and regulations. It's still very challenging to short the market. It's not allowed. Equity lending. There's so much that we need to do in terms of regulations and allowing people to do that. So I don't see that. However, at Global, we do have an open architect platform within the international asset management platform where we select the best of breed in different, whether it's hedge funds or other different classes of international asset management, and we do portfolio management of fund of funds, but we don't manage them, we manage the managers. So we do that too. We also do real estate asset management, and again, focusing on real estate asset management within the region. We're about to launch our first Saudi real estate income fund. So
obviously you're growing a lot outside of Kuwait. Yeah. You've had great support within Kuwait from the sovereigns, from the government backed investment companies, as well as the local market. Do you ever think that maybe Global should be in another financial hub? What keeps you in Kuwait? What is is it a compelling factor of your growth, meaning the local investment, AUM, that kind of thing? Or do you think about not just having these satellite offices, but really putting a headquarters?
Yeah, it's a very good question. Actually, when we established Global in Kuwait, I'm Kuwaiti. Obviously, it's got to be in Kuwait. It's my home base, So, but Kuwait is a very good place to start for many different reasons. First of all, it's a rich country. Right. There's money. There's a lot of money in Kuwait. It's not like doing it out of Bahrain, for example, where you would struggle to find AUM with very few families. The second, Kuwait is very well regulated, and the legal system is also very well established. Kuwait has gone through a lot of financial crises in the 70s, and war and liberation and a second war. So there's a very strong legal clarity about how to operate within Kuwait. Challenging, but if you know your way, it's extremely strong. And thirdly, the Kuwaiti investors are known all through the region, and anyone who's dealt with the region, I'm sure, had some encounters with Kuwaiti clients. Squid's shaking his head. They're different in terms of caliber. They're very sophisticated. They're very shrewd. They've been doing financial investment since the 60s. So they really understand financial investments. And if you succeed in Kuwait, if you win their trust, you automatically win the trust of other clients across the region. So it was a very important platform to be launched from, and I think we created that strength because we were established in Kuwait. Now, moving forward, obviously everybody's talking about Dubai and how important Dubai, and why not move to Dubai. Dubai, to me, it's a very important platform for networking. That's why we just launched our DIFC office November last year. And we think it's going to be an important office, and we shuttle to it, and there is a team there. But it's not a place where it's very expensive. It's hard to find human resources. They're very expensive. Even people, if you hire, they are very expensive. But the real important area that I'm really zooming in right now is Saudi Arabia.
Yeah.
That's where the biggest potential right now, with the news coming that Saudi is going to open its market. If you talk about a maximum exposure of 10% of international investments into the Saudi market, you're talking about more than $50 billion of AUM coming into the market. If they hit the Morgan Stanley Emerging Market Index in 2017, it's trillions of dollars. It will make the kingdom, the Saudi Arabian equity market, larger than Russia. So it's so important for us to look there and focus there.
But going back to your opportunity as global and your investors, when you think about, for example, the Saudi market and opening up, are Western or global investors, I should say, coming in to global to access those markets? Or is it local investors that continue to be your bread and butter, if you will?
When I devised the strategy of global, it's made out of 4 squares. The first square, which was our initial period, is to do Kuwaiti products for Kuwaiti clients and establish our core, establish our reputation and our focus. It was our home, so it was very comfortable in our domain. The second stage was to develop ourselves to create GCC products, but again for the Kuwaiti clients, because that's where we were strong. We were not traveling around the area. Now, I'm talking here 5 years. Then we moved into creating GCC products for all our GCC clients. So we went into creating Saudi funds, Qatari funds, Omani funds, for Omanis and GCC. So we became now no longer the Kuwaiti entity, we became a GCC entity with a GCC client base. The last step was to do everything about the GCC and MENA for international clients. And that's where this has been my biggest challenge, is to bring our voice to the international community, to know what we offer and being known as the local expertise.
So are you proactively doing that? Are you on roadshows? Are you taking the story to
No. Obviously,
New York,
we did
London?
that before.
Yes.
When we established the GDR, that was the main purpose of doing that, is to get that kind of exposure. Financial crisis shut us back for 7 years. And now that we're back on a healthy track, I think, yes, this will be our most important focus, and some of the important things that we need to deliberate and we strategize on all the time, who should be an anchor investor within global. So bringing someone with an international asset management background who would want to penetrate the region but wants the local expertise and a strong platform, global would be the best option. So maybe that's what it's going to take, or maybe it's just going to take more roadshows, reaching the right, and then hoping everyone here within this platform will connect us with someone. Right. I'm not doing this for free. Will connect us with someone who's interested in the region and doesn't know how to.
Well, I think, you mentioned Abraj earlier. I think it's been interesting to see local investment firms to MENA coming into the American market or to Canada, Europe, et cetera, and Asia certainly, and have really gotten quite a bit of interest in the past year for investing in the region, in the GCC and beyond, and even in places that have experienced turmoil like Egypt and other places in the region. So I think we've certainly seen, as ABANA, serving as a crossroads between the Middle East and North America, quite a bit of interest. And so it is, it seems to be a bit of getting the story out, but it's also now getting more competitive, I would imagine. So when you think about, telling that story, and I heard you say, taking global public again, what would you do differently? I mean, now you really do have, again, another global opportunity in terms of international investors who want to penetrate the Middle East, who want to learn more, get into Saudi as it opens up, who want to take advantage of opportunities in the emerging markets of the Middle East as well. What are you thinking about, doing differently this time around as some similar opportunities present themselves again for a second time?
Yeah, I think what's really important is the kind of products we're offering. Lana, I've realized that a lot of the international investors, when they think about investing in the public markets, they think they can do it themselves directly. And what they do usually is just pick the large caps, the most important company. They don't go to the mid cap. So when we try to sell our expertise in managing public equities, we try to convince them that we know how to manage not just simply the 10 largest exposures in the GCC or MENA, but deeper than that. But it is the most challenging part.
But have you improved in terms of risk metrics and the kind of things
Yes.
that all investors want to hear about?
Yes.
Has there
Yes.
been a very significant change
Yes.
post-crisis?
Yes, definitely. I think in terms of our capabilities of being an asset manager, we've only become stronger, but we were always strong. Unfortunately, when something happens to the brand, like it has happened when an investment company goes into a default, people would think that you have bad risk management or you didn't have all the necessarily assurances or controls in place, which is not necessarily true. I think we as an investment company operate with such diligence in terms of governance committees, risk committees, compliance, audit, investment committees that we have, the softwares that we use, the systems that we employ are very sophisticated and within asset management, within global, and it's very impressive. What happened to the company should not, but obviously you could not separate the two in the eyes of the clients. Sure. You defaulted, that means you're bad in everything else that you do. But strangely, that even during our default period, we had almost 70 million KD worth of cash of AUM. Clients didn't withdraw. I mean, a lot of the investments that we have in AUM, most of them were weekly liquidity. And they didn't withdraw. They liked the performance. They knew we were doing a good job. And they knew completely there was a Chinese wheel between off-balance sheet and on-balance sheet. We were very strict about that's why we came back. Right. I think the reason you come back is not just because you negotiated with banks. It's also because you proved your conduct, you proved your ethics, you were transparent, you protected their money, you did the performance, and that's why we're still surviving. Because you're talking about also the same management team.
Right.
You know what I mean? So people would say, oh, okay, you brought a new management, and I really like Muna, and I trust her, and I know her resume. Now I'm going to give you back again. No, it's still Maha. It's the same person that created the company, the same person who went into default, the same person who took the company out of default. So we must be doing something right. I mean, people finally started to understand the difference between the macro situation and the crisis we went through and what happened to the company. Sure. Taking responsibility, obviously, for the mismanagement of short-term funding with long-term. We understand the mistakes.
But when we think about global, we do think of you.
Yeah, this has to stop.
I mean,
I'm not sure how to stop it. This has to stop.
Well, I mean, this is the issue. And when you, as you know, when you're an investor in any business, you think about the depth of the management team and people, and myself included. When we think about global, we think about you. So, talk to us a little bit about how the team has developed and deepened and strengthened as you think about, continuing to grow.
Yeah, my biggest challenge ever since we've created Global, ever we celebrated our first success was how to make this company live 200 years. Mm-hmm. When you see financial institutions that celebrate 150 birthdays or 200 birthdays, you know what that means? They went through World War I and II and every kind of crisis that you can think of. What makes them survive? And I know it's going to be too optimistic to expect Global to be what it is for another 200 years. Who knows what we're going to be after 10 years? I've always been very flexible about where this company is going to take shape or form, subject to what we see in terms of challenges. But obviously, it is very important that I want to feel that Global is going to continue even without Maha or without the founding members of the team. So I'm very proud of the quality of people that are in Global. They're fantastic. And I've tested them during the financial crisis, And it's not only about being smart or being creative or being good at what they do, but in terms of loyalty, ethics, family atmosphere, their connections to the company, and their deep connections to the company and their clients. So I'm very proud of them. And last year, we've seen some serious promotions happening within Global today. So Sulaiman Rubayya now is the Executive Vice President of Alternative Investment. He's fantastic, CFA, MBA, quality of no match when it comes to alternative investments, and especially in the private equity domain. Badr Al-Ghanim, who's been managing direction of public equities for so many years now, became executive vice president of MENA, equities and fixed income. Samir, within the investment banking, became the head of investment banking. Rasha Al-Qana'i, who has been with Global since she graduated from med school, is now the head executive vice president of wealth management. So the team is there. And it's a very strong management team, born and raised and trained well, and been through hard times. Sure. So they still survived. Sure. So I think there is a strong foundation for the succession of Global.
I'm going to keep asking questions until Maha shuts me up. But in the meantime, if anyone else has any questions, please feel free to chime in. This is meant to be interactive, and we'll get a mic to you. So you continue to have amazing support from the sovereign wealth funds and
no. But that's not that true. No. The sovereign wealth, especially in the region after the financial crisis and our public default, has become very sensitive to doing business with Global.
So
the media was very hard. I mean, right. We went from being the darling of the financial sector to the ugly duckling, So they had to protect themselves, and they felt very sensitive working with Global. So we haven't had any single new dollar AUM since the financial crisis from the sovereign wealth.
Any remaining AUM?
Yeah, there is some remaining AUM because of the performance, but they're not giving us a single dollar. And what's important now is that we went into our second year profitability. Our first quarter results were also announced, and they are much better than our competition. Going back to the public market, I think hopefully that would elevate the pressure, the political pressure they undergo due to the audit bureau and all the fuss that happened against Global during the bad times. And I'm optimistic that they will come back, obviously, because there are very few competition who do what we do and as good as we do it. So ultimately, I'm optimistic that and that's a future opportunity, sure. Which is very nice.
Sure. And so, obviously here at ABANA, we hear all the time from New York-based investors and investment companies. What do Middle Eastern investors want? What are they looking for, both in terms of their regional investments? What are the criteria? What are the things that really, move the needle for them? And what are they looking outside of the region?
Yeah.
And if you could talk a little bit about that, and then talk about, also whether you can do that for them outside of the region.
Yeah. Well, obviously, at least the clients that I interact with regularly have changed their profile. I think what they want from us as the local regional asset management is different than they want from any of their international asset managers. They look at you differently than they look at us. With them, I see them not hesitating, taking risk, investing in private equity funds, investing in real estate funds, and even real estate development funds, hedge funds. With us today, they have become very sensitive, and they want from us to continue to show them opportunities, whether it's in the region or outside, that are very transparent. So they're no longer interested in black boxes. So if you want to do a private equity transaction, it could go through a secondary fund, where they know what they're buying and what value they're buying, or you do a single transaction, SPVs. So that's the direction we ended up pushing our team through, because that's what the clients want today. They want income. They are very keen on liquidity. So you can't go now sell them a fund of 7 years with an extension of 3 years. They would shy away.
What about Islamic funds?
Yeah.
And the growth of that? Is that continuing to accelerate in the same way?
Yeah, I think there's been a lot of disappointment in the region from Islamic investment companies, and I think they were hit the most.
Because of fees, because of actual performance?
Yeah, there are many very different reasons, and because a lot of them went into the real estate development aspect, being an Islamic Sharia company, so most of their products offerings were illiquid and very high risk, So yeah, we do Islamic investments, but okay, there's some demand, but in the end they look at the merit. What is the actual transaction you are offering me now? How you structure it is always something that we can manipulate. We can change it. So yeah, it's more than that.
And what about investing outside of the region? I mean, for the clients that you do have, what opportunities do you see in terms of converting those clients into additional or taking them with you into additional funds and additional investment mandates abroad?
Yeah, there is a huge interest international. Obviously, the geopolitical risks we're witnessing within the region is making people even more and more nervous of making further investments within the region. They believe that the risk they are exposed to through their actual operations, which are managed and operates in the region, is sufficient, and any excess liquidity, they prefer to park it outside. So that's always been the case, by the way. It's nothing new, but people are becoming somewhat more even conscious. But also, they're very opportunistic. I think a lot of people are trying to take advantage of opportunities that are popping up in other markets like Egypt. I always hear my clients talking to me about find me opportunities in Egypt, because Egypt is an economy that actually has manufacturing, agriculture, serious, genuine sectors. So there is that too.
Do you find that it has too much attention right now?
Yeah,
It feels opportunistic, but it feels also like there's a flood of capital.
Yeah, and also risky.
And also risky.
Yeah, very risky. So you need to have a specific one. And for example, out of Saudi Arabia, we have a lot of people who are interested in Egypt. You don't find the same out of Qatar, for example. Sure. You know, so different clients have different perspectives.
Maha, I want to thank you so
Thank
much
you.
on behalf
Thank
of
you.
ABANA for
Thank
embracing.
you.
Thank you, everyone, for joining us.
Thank you.
We hope you'll visit us often.
Thank you. Thank you, Mona.